Andrew Lawrence, head of property sector research, Asia ex-Japan at Barclays Capital. Good to see you, Andrew. I guess maybe a few months ago people were thinking maybe you're crazy, but it looks like it's actually happening right now.
No, certainly we're seeing a lot more evidence now of price correction coming through in the market, particularly in the secondary market, where we're seeing sellers having to start cutting prices to get some transactions away.
Yeah, that's right. Could it be even worse?
Well, I think it really depends upon what happens on the global markets as well. In effect, we're going to see, if we see a global slowdown, then clearly we could have more of an impact, as well as if the government starts to increase the land supply as well.
Yeah, but what about that disappointing land auction? I know it was held in Shanghai. It wasn't like a lucrative prime location like in Central, but still, isn't that telling of how many people are actually interested in real estate at these lofty levels?
Yeah, well, I think it tells us two things. I think, firstly, it tells us the developers' appetite for buying land here. But secondly, I think it shows, interestingly, that the government's prepared to accept lower prices for land, and therefore much keener on ensuring that there's more supply than worrying about the tax revenue coming in. So it's changed its policy from a high land price policy to one much more focused on supply.
Right, and from what I understand, the last time we spoke was that you expected this to 15–20% decline to come in to play because of higher mortgage rates coming from banks. Is that still the scenario? Still
the scenario. We're still seeing a squeeze in Hong Kong dollar liquidity in the banking system. We're up to about 84% loan-to-deposit ratio in the banking system, which means that many of the banks are now having to compete for deposits, which is raising their funding costs, and therefore that's being passed on to borrowers through higher mortgage rates.
Yeah, and there's no liquidity. They have to, they can't dole out that much cash for people to buy houses here in Hong Kong. So is there a differentiation in terms of how much prices will come down in different segments of real estate? You have low-end, I guess the mass market, and then, of course, the luxury parts.
Yeah, I mean, I think we see the luxury market as being quite independent of the mass and mid-markets. People don't really borrow to buy homes up in the luxury end, so they're less interest rate sensitive. They're much more sensitive to equity markets, general global sentiment, etc. Whereas the mass to mid-market is very much more a mortgage-dominated market.
So you're saying the luxury sector will be hit harder? Is that what you're saying?
No, we're saying the mass and mid-market will be hit harder by the rise in mortgage rates. The luxury sector will really depend upon sentiment in equity markets and general economic sentiment. So we could still see a pull-off in the luxury market if equity markets were to dip and sentiment globally was to turn down.
Okay, that's interesting. What does this mean for rent? There are lots of renters out there with a lot of expats here in Hong Kong. Does that mean their rental prices will come down as well?
I think in time they will. Unfortunately, probably we'll see people switching from buying to renting in the short term, which will push rents up in the near term. But after that, we'll start to see people put more property to the market, either for sale or for rental. So as prices fall, rents will also fall.
And how long do you think that'll take to filter through?
I think what we'll start to see is transaction volumes are down a long way already. So we've seen, as the mortgage rates have gone up, transaction volumes in the secondary market are now running 50% of what they've been doing on an average. So we'll start to see transaction volumes coming off, secondary prices start to dip, and then really take us a couple of months in towards the end of the year as we start to see more price falls.
Okay. Now, we keep talking about Hong Kong, one of the priciest real estate markets in the world, but across Asia, are there better values out there? Sydney has been called the safest bet, apparently.
I think it's difficult to see. If you look here, Singapore, where the government's also enacting policies to try and cool the market. We've seen many property markets rise quite strongly in the last couple of years.
Yeah. But is there one that you would pinpoint and say, well, this is probably a better value, better pick for those looking to house hunt?
I think generally, if we look on a sort of, if we look globally, then I think we see housing markets, on a global basis being quite expensive, being held up by very low interest rates. Our concern on a global basis, looking at house prices, would be that we see slowing growth and rising unemployment, potentially, which could actually impact housing markets long term.
All right, all around the world, so we could get deals soon. Okay, Andrew, thanks for dropping by today. Nice to see you. Andrew Lawrence, Barclays Capital, and he's sticking with his prediction of 15–20% declines for home prices here in Hong Kong next year.